Abhishek, I would want to understand from your view, do you see value in any part of the automobile space, be it two-wheelers, CVs, even ancillaries like CV financiers or vehicle financiers, if not passenger vehicles, or even auto ancillary? How are you analyzing the entire set of issues which are at play as far as auto space is concerned?
Yeah, interesting. I think the auto space, one thing that people tend to, sort of ignore in this entire debate over the last, 1 month, is that auto is essentially a cyclical industry, right? And we are going through a cyclical downturn right now. And when we talk about an auto industry, it's not one composite whole, right? You have two-wheelers, three-wheelers, you have passenger vehicles, you have CVs. So across the spectrum, the challenges are different, the reasons for the slowdown are different. Just looking at one or two aspects like the GST, would you go and buy a car if you get a few percentage point less of taxes? Is that a question that I ask myself? I'm not very sure the answer is yes. So now coming to auto stocks, right now I still think that it is still going to be some time before the auto sector needs to sort of take out all the inventory from the channel, and then it will start picking up. So there's possibly going to be a lot more of consolidation, lot more of time that you can cherry pick. Having said that, if you are looking at companies like Maruti, if you're looking at companies like Hero, Bajaj Auto, these are probably good names to have on your watch list. And then maybe over the next 4 to 5 months, as and when you get the opportunity, you can start picking up in small size.
Right. I want to understand from you the two spaces which you like, agrochemical and API pharma. Agrochemical stocks, PI, Dhanuka, etc. have done pretty well last cycle. How do you analyze the business models now after the correction, the prices, and also API, pharma API have been a newfound love for the stock market in many sense. It was not very popular space to be in. We did not have many players as well, but Aarti seemed to be doing pretty okay there. How are you analyzing the business models of these two companies?
Yeah, so if you look at both the stocks that you mentioned, Aarti and PI, they're market leaders in their own space. They're doing extremely well, not only in the agri space, but the other areas that they were operating in. So specialty chemicals, APIs, as the case may be. Now, what just a broader look at the overall chemicals and the specialty chemical space, I'm of the view that because of the disruption in China and the fact that India obviously is gaining from it, and we have the companies which are able to scale up for the last 2-3 years, it sort of in my mind to a very small extent mirrors what we saw in the IT boom. Right, here is a similar kind of structure that I see, that you have global players who are coming and outsourcing or tying up with the Indian partners, and the opportunity size for the Indian players can actually be significantly high. And again, with keeping in mind the same kind of structure, the bigger and the more dominant players can continue to dominate in that space. Right, so PI obviously, other than the agro space, they are very, very dominant in CSM, custom synthesis. They have tie-up with some of the largest names in the global industry, and they should continue to do well. They've done well for the last many years. The stock has been a very good wealth creator, and I expect the story to continue over the next few years as well. Same case for Aarti. I think Aarti is getting into newer chemistries. They've got very large, long-term orders from, again, global majors, which spans, 5 years, 10 years. So the offtake is, sort of guaranteed. And the nature of the business is probably that the big is likely to get bigger, the strong likely to get stronger. So I am pretty bullish on both these two companies.
Right. Abhishek, the PSU space, mainly on, chatter that the government will not go for a divestment plan which would be, at any price, will not bunch it up in ETF format. That, saw some very good action. But otherwise, PSU space in overall has underperformed the market if you look at by far the PSU stocks. My colleague Ashna is gathering two specific companies, GAIL and NTPC, latest developments there, and then I would like to understand from you how you're analyzing the PSU space. But Ashna, what are you gathering regarding the divestment plans of the government?
The mighty target of 1.05 lakh crore rupees when it comes to disinvestment target for the current financial year. The government, we are picking up from our sources, is looking at various ways now to achieve this target, and it is now also looking at monetizing the assets of the energy firms such as GAIL's pipelines as well as Power Grid's transmission lines. And the talks to study these possibilities is currently going on between Finance Minister Nitin Gadkari as well as Dharmendra Pradhan and R.K. Singh. Apart from this, the government may also start looking at OFS, that is offer for sale, despite the current uncertainty that is prevailing in the market, and the government is planning to raise about 8,000 to 10,000 crore rupees from OFS, and also as of now it looks like that the central exchequer will gain from asset monetization of PSUs via higher dividends, and it looks like almost a certainty now, and the DA in fact is finalizing a list of PSUs that will be paying higher dividends. Not only this, the government has also asked the PSUs to send their capex plans to them, and if their capex is not crystallizing, then they must pay higher dividends. That is what we are picking up from our sources. Lastly, another important thing that we have picked up is that the Finance Ministry for now has shelved the plans of merging the three insurers. Remember, in last year's budget, the government had said that they will be merging the three insurance companies and will be creating a one entity out of that and will list that particular entity. But right now, because of poor solvency ratio, they are not going to proceed with the merger as of now, and this plan has been put in back burner. Remember that for an entity to be listed, it has to have a solvency ratio of 1.5.
Abhishek, when you analyze the PSU space, be it PSU banks, even if they are larger banks, PSU utility companies or oil marketing, what is your thought the way these companies or universe is trading? Do you find value in any part of the PSU space?
See, the way I try to look at PSUs is try to bucket it into two buckets. The first one is those companies which benefit from being a PSU, and those which are, just happen to be owned by the government. Now, I'm not interested in the second bucket, I'm interested in the first bucket, and let me explain. So, the first bucket is basically those companies where they have a competitive advantage because of the ownership of the government. So it could be the defense PSUs, it could be the railway PSUs, to an extent it could also be the larger PSU banks. Now in this entire space, I think the point of higher dividend yield is something which is very important, because the situation that we are currently in, it's unlikely that the dividend yield for some of these stocks are going to go down. So in this entire basket, there are a few that I like. RITES is one of them. It's a very interesting play because it's basically in the space of railways and airports. So they do design, engineering, consulting for railways and for airports, for NHAI, and it's seen decent growth. It's got pretty high dividend yield. So this is one of the stocks that I like within the PSUs.
Right. In fact, if you talk of the mid-cap names, country's largest and most respected fund house, HDFC AMC, has been shopping, and my colleague Jayesh has done some work on what kind of names have they been shopping for the last week. Let's go through that quickly and then we'll talk about some of the interesting names out there. Jayesh, what does the list look like?
Some interesting trends coming out of the stable of HDFC Mutual Fund. First and foremost, they now have equity assets worth 1.5 lakh crores, and that is primarily or heavily invested towards the financials and the utility space. We have seen that utilities has become a big component of the HDFC Mutual Fund as well, along with ICICI Prudential Mutual Fund as well. The top buys in terms of August, they bought most in financials and the material space. But interesting bit to note is that they had no top sells. In fact, all the sectors that they have only added positions and reduced none of them. Yes Bank is the stock that I want to highlight because this is the second month in a row that they have picked up stake. 3.4 crore shares is what they bought in August as well. Though the stock did decline about 35% odd, but this is the trend that is developing, second straight month that they have bought into this stock. NHBC and BEL is the other two counters that they bought more than 1.5 crore shares, and the stocks also managed to give positive return for the month itself. ITC was the one which went down nearly 10% and they added nearly 1 crore shares, along with Reliance Industries. Now this is the heavyweight after a long time that we are seeing among the top 5 purchases for HDFC, about 70 lakh shares that they have added, and the stock managed to gain about 7% odd. Among the top sells, what we had was BHEL and SAIL, about 2.5 crore shares each that they have reduced from the portfolio. Both these stocks declined about 15 to 27% odd. NIIT Tech is the one which they had, and they reduced about 28 lakh shares over there, but the stock managed to go up about 25% odd. Tata Motors and Tata Chemicals from the Tata Group stocks also, where they have reduced significant positions in August.
Right. Thanks very much for that. Abhishek, if you look at the data coming out of the insurance companies, not only are the insurance companies adding a lot of clout as far as the market share is concerned, the private ones, the listed ones, but also we are witnessing a lot of institutional interest in that sector. Have you analyzed insurance space or anything which you like there in particular, or your opinion or observations there?
Yeah, I think the insurance, especially the life insurance sector definitely looks good. The only challenge I find in terms of buying a stock from that space is the valuations. But from a business model perspective, I like HDFC Life, I like ICICI Pru, and to an extent I also like what SBI is doing in the life insurance area. But primarily, I would go with HDFC Life because of the product innovations that they come up with pretty regularly. Valuations, in my mind, are still not very reasonable. So, waiting for it to get into my comfort zone. General insurance, I've not studied it in a lot of depth, so I don't think I would be able to comment on that.
Right. All right, Abhishek, we'll let you go on that one. Thanks very much for joining us.